Good evening. Today, we will be covering the post-market update dated the 4th of September, 2024. Indian benchmark indices followed the global trend and ended on a negative note, with Nifty breaking its 14-day winning streak, closing below 25,200 amid selling across the sectors barring realty, FMCG, and pharma. At close, the Sensex was down 202.80 points or 0.25% at 82,352.64, and the Nifty was down 81.10 points or 0.32% at 25,198.70. Asian Paints, Grazim Industries, HUL, Apollo Hospitals, and Sun Pharma are among the top gainers on the Nifty, while losers are Wipro, Coal India, ONGC, Hindalco Industries, and M&M. Talking about the corporate segment, we have BEML is among the defense stocks that surged around 7% on September 4th after the Defense Acquisition Council approved major procurements worth 1 point for rupees lakh crore for the armed forces. The stock surged amid heavy volumes as 17 lakh shares of the defense PSU changed hands on BSE and NSE combined compared to the 1-month average trading volume for 5 lakh shares. BEML is a public sector undertaking that manufactures a variety of heavy equipment, such as that used for earth-moving, railways, transport and mining. It manufactures variants of BEML Tatra vehicles for all-terrain operations, and also supplies engineering mine plows, tank transportation trailers, weapon loading equipment, armored recovery vehicle, mill rail coaches and wagons. The company plays a role in the country's integrated guided missile development project by supplying ground support vehicles. The company has also created a test track at its KGF complex to test defense equipment and vehicles. BEML recently inaugurated the prototype manufacturing of driverless metro train sets 5 RSDM project dedicated to fulfilling the Bangalore Metro Rail Corporation's project for Lines 2 and 6, including the ambitious Bangalore Airport line. RAMA steel tube surges 8% in trade on September 4th, after the firm announced a strategic collaboration with Onyx Renewable. Over 10 crore shares exchanged hands in trade on the bourses, over 200% higher than the 1-month daily traded average of 4 crore shares. This partnership will focus on leveraging the expertise of RAMA steel tubes to provide steel structures along with single-axis trackers, and will also focus on dual-axis trackers to be expanded in the future, essential for solar projects undertaken by Onyx Renewable, said the firm in a filing with the exchanges. RAMA Steel Tubes has expanded its expertise and developed specialized steel structures and tracker tubes which will serve as the backbone for greenfield solar projects. This marks the firm's entry into the green energy segment. The steel player also added that it is determined to deliver products that ensure the highest standards of reliability, durability, and performance, which are critical to the long-term success of solar greenfield projects. Over the past year, shares of RAMA steel tubes have fallen around 9%, as against a 30% jump in the Nifty 50 index. Shares of EXICOM TELE systems dropped 5% on September 4th, a day after the big bull Rakesh Jhunjhunwala's rare enterprise trimmed its stake in the company. The Rakesh Jhunjhunwala entity sold 15.85 lakh shares, making up a 1.3% stake in EXICOM TELE systems for an average price of 348.60 rupees, data on the exchanges showed. The total stake sale was valued at 55.25 rupees crore. EXICOM TELE, which operates in the electric vehicle charger market, made a stellar stock market debut in March this year, as it listed with a premium of over 80%. EXICOM enjoys a first-mover advantage in India's EV charging sector. By financial year 2024, the company has made significant progress in the market, deploying over 65,000 chargers across more than 400 cities. The company's extensive network has positioned it as the leader in residential chargers, holding a 60% market share, and it also commands a 25% share in the public charger segment. In addition to that, the government support towards the adoption of EVs also augurs well for EXICOM, further aiding its growth prospects. Looking forward, EXICOM's management remains optimistic about the future of its EV charging business, buoyed by the growing adoption of electric vehicles across diverse automotive segments. Shares of General Insurance Corporation of India, GIC Re, are in focus on September 4th as the centre looks to sell a nearly 7% stake in the company through the offer for sale route. Government will divest 3.39% equity with an additional 3.39% stake as the green shoe option. The OFS opens today for non-retail investors. Retail investors and GIC Re employees can bid on September 5. The equity shares can be subscribed between 9:15 a.m. and 3:30 p.m. on both days. The floor price for the OFS would be 395 rupees per equity share. The seller plans to offer up to 5.95 crore equity shares, each with a face value of 5 rupees, representing 3.39% of the company's total paid-up equity share capital, on September 4, 2024, T-Day, for non-retail investors. The sale will continue on September 5, 2024, T+1 day, for retail investors, employees, and non-retail investors who choose to carry forward their unallotted bids from T-Day, GIC restated in a BSE filing. Additionally, there is an option to sell another 5.95 crore equity shares as part of the base offer, with oversubscription bringing the total offer to 11.90 crore shares, or 6.784% of the company's equity, it added. Swelect Energy Systems Limited in daily time frame is trading around 1,173.10 points with a change of 20% and is trading with a net volume of around 865.503 thousand shares. The share price is trading above its moving average 1,033.57, which is a good indication for the stock. While shares are trading with a relative strength index of around 60.64. Deep Energy Resources Limited in daily time frame is trading around 317.61 points with a change of 19.97% and is trading with a net volume of around 1.661 million shares. The share price is trading above its moving average 245.35, which is a good indication for the stock. While shares are trading with a relative strength index of around 89.82. Moksha Ornaments Limited in daily time frame is trading around 24.24 points with a change of 19.29% and is trading with a net volume of around 7.77 million shares. The share price is trading above its moving average 21.23, which is a good indication for the stock. While shares are trading with a relative strength index of around 70.14. For the stock recommendation we have, Computer Age Management Services Limited looks good and can be bought at 4,437 rupees, keeping a stop loss of 4,328 rupees and a target of 4,550 rupees.
You can reach us via phone, WhatsApp, or email using the information listed on the screen. Thank you for joining us today. If you found this video informative, please give it a thumbs up, and don't forget to subscribe for more financial insights. And, as always, if you have any questions or topics you'd like us to cover in future videos, leave them in the comments section below. Until next time, happy investing.